Is a big question. But SP Tulsian of sptulsian.com is with us now. Mr. Tulsian, good morning. What's the long-term stock bet?
See, Anuj, it's a little bit controversial and maybe, surprising stock which I've chosen for this morning. That is Bhushan Steel. Because the kind of noises which we have been seeing from the renowned experts that equity has a zero value and all sort of things. And that has been, creating a lot of panic. But let me just first quickly go into the fundamentals and background of this company. Probably there are five NCLT cases in respect to steel accounts. One is Bhushan Steel, which is listed one, Bhushan Power unlisted, SR Steel unlisted, Electro Steels Limited, and the fifth one is Monet Spark. And if you really ask me, there are 5 serious buyers from the Indian entrepreneurs. They are JSW Steel, Tata Steel, Vedanta, Ajay Piramal, and you can say ArcelorMittal, though you cannot call it as an Indian promoter, but they fall 5 are serious. Apart from that, many of the global players, maybe like POSCO, many from the few from South Korea, few from Japan, they will all be throwing their hat in the ring along with the PE investors. So there is going to be the stiff competition in acquiring this. Obviously, the existing promoters will also be seen in the fray. Now come on the fundamentals of this company. They have a 5.5 million ton plant. It is probably, if you really ask me, I won't be hesitating in saying that this is the best plant. Better than JSW Steel and better than Tata Steel. Obviously better than Steel Authority also. In terms of the quality of the flat steel products which they make, they are making auto grade steel products supplying to Maruti, Hero Moto and all sort of things. I'm not saying that other steel makers are not producing or not supplying. So this is a situation number one. Number two, if just I quickly go on the FY17 results of the company, and compare it with the JSW Steel, which is the strongest player. Just to give the EBITDA margin, the JSW Steel had posted an EBITDA of 12,000 crore with EBITDA margin of 22.1% for whole of FY17. While Bhushan Steel has posted an EBITDA of 3,054 crore with EBITDA margin of 22.28%. That means 18 basis point better than the JSW Steel. In spite of the 1/4 capacity, in spite of the lower capacity utilization to the extent of about 60% because of the working capital constraint and all that. Second and next, thirdly, if you must have read the report day before that production or the capacity utilization of Bhushan Steel has improved in the month of August and September to as high as 3 lakh ton from 2,40,000 ton which they used to operate after the appointment of the interim resolution professional. So obviously all those things by the old promoters were not carried out in a transparent manner because of the NPA status and all that. Lastly, the media report have been loosely suggesting NPA of 50,000 crore, which they loosely include the working capital finance also having given. Working capital for a running company, and if it is having a turnover of maybe 13,000-14,000 crore a year, cannot be called as an NPA because they are supported by the current assets also, that is inventory and receivable. So even if I take the NPA of about 45,000 crore, because 5,000 seems to be on that account, the working capital 45,000 crore, NPA 45,000 crore, of that on an average, as indicated, no one has come and given the indications that what kind of NP has been provided, but it seems to be at about 40%. And I feel that looking to the competition or from the inside sources, the bankers will be writing back the provisions already which they have made. So taking all this into consideration, I can go long, can compare it with the other steel players and all that. But due to paucity of time, I won't be going into all those things. Promoter stake is very high, so naturally the equity base, I'm not saying that the promoters will be enjoying the same stake and all that. The public float is very low on a market cap of about 1,700 crore. Paid up equity is very low, 45 crore. So because of that, once you have a good news, which we have seen in case of Emetech Auto, where when all 4 stocks hit the upper circuit day before, once we have these kind of news coming in that Vedanta, ArcelorMittal, Tata Steel, JSW Steel, all have shown interest, you won't be able to catch this stock. One may argue that this is a bit high risk, high return stocks, but risk seems to be lower, return seems to be quite high. So maybe with that view, share now ruling at 67, we are giving a target of about ₹80 in next 6 months or so.
Okay, all right, Mr. Tulsian. Thank you very much for joining in and giving us your view on that long-term stock bet, which is Bhushan Steel for this morning. Well, we've got just about under 6-7 minutes to go before the day opens out for trading. Udyan Mukherjee joins in on this leg of the show. Good morning, Udyan. Always a pleasure talking to you. So we are now gearing up to wind down the second quarter earnings season, and this was always supposed to be the litmus test for the market, right? Whether reality can catch up with stock prices. Where do you think we are in that debate?
Morning, Surabhi. I think earnings season has been okay. I mean, we spoke about it last time, but I think there have been some hits, some misses. We are 2/3 way done with the earnings season now. And at this count, 34 Nifty companies have reported, and we've got about 6% PAT growth. We should not get into the debate on taking two companies out and therefore the growth should be 10%, because that kind of cherry picking will lead you nowhere. So all put together, we've got 6% PAT growth so far from the first 2/3 of the companies in the Nifty. Usually the last 1/3 is not better than the first 2/3. So going by historical precedent, we'll probably end this earnings season with probably this kind of growth, 6-7% or 5-6% kind of PAT growth. It will not be great, but we knew that this quarter was not going to be great in any case. I think the litmus test, as you said, is probably the next quarter and the quarter after that. So we'll probably keep our fingers crossed and hope that we get well into double digits. We need to do that if we are to get to 10% plus for the whole year. So for now, this earnings season, I think mixed bag, but there have been some notable surprises in companies like Bharti, where the expectation was quite poor. So I think there have been some positive surprises, though downgrades are still outnumbering the upgrades.
Okay, yeah, but as well, Titan, isn't it, Udayan, came with fairly mind-boggling numbers over the weekend. And you have a public sector bank set of stocks which are showing lower pain. Is all that likely to, lead to an expectation that second half is much better?
I hope so, but Latha, I mean, that is already in the price actually. I mean, the way stocks are priced right now, I mean, it is completely pricing in a major recovery in the second half of the year. So, I mean, while you can make a case for a recovery, I think we should also keep the prices in mind that I think the stock prices in most cases are factoring in a remarkable recovery in the second half of the year. But Titan's been a spectacular set of numbers for the second quarter running, 30% plus sales growth. I think they're making a significant case for that structural shift that everybody's been talking about from informal to formal. And the numbers are bearing through that kind of optimism. So Titan's been a very good one this quarter. PSU banks in a couple of cases like PNB, Union Bank have not been bad. But I'm wondering whether some of these slightly stronger banks are actually turning in a good performance this time, because they are all out with their bowls for the recapitalization. And the news from New Delhi is that the stronger ones will get most of the capital. So I'm wondering whether there's a little bit of pre-acceptance positioning which is going on in the numbers which are being put out, saying we are very strong, we need the capital because we need the growth capital, so you can keep out the smaller ones which are falling by the wayside. There may be a little bit of that window dressing which might be going on, but you're right that a couple of the PSU bank numbers have been a bit more encouraging than the previous quarters.
Oh yes, by the way, Titan at 10% will hit $10 billion of market cap. So from 300 to 725, it's been phenomenal run. Before we resume conversation with Uday, pre-open rates have settled 20 points lower. Ashwini, thoughts on that and your 914 call?
Well, we are going to open exactly where the pre-market trades were given. So on this sort of gap down, after the market kind of stabilizes, you would tend to buy. As far as 914 is concerned, EIL, oil is moving up, so maybe investment in HPBP picks up. So 914 EIL is a buy with a stop of 188, target of 202.
Okay. Uday, good morning. The other part of this market which has done really well is of course PSU banks have done well, but other PSUs have also done well. ONGC has started to make a move after a long time. We have seen a big move in EIL. There's disinvestment I think in Dredging Corp. Shipping Corp has been making moves. Any thoughts here?
I think some of the oil sensitives are beginning to move up, Anuj, because ONGC is such a bombed out stock. I think with the resurgence or the recovery that we've seen in the underdogs, I think it was fairly conceivable that some of the attention would shift to ONGC. And I think there's a reasonable case for ONGC to move above 200 after being such a languishing stock for so long, with crude at 63, 64 now. So I think some of the oil sensitives are beginning to lead a bit of a recovery out there. So I'm not surprised with the ONGC having moved up, and maybe there is some more juice out here. But I think the other interesting aspect of the market, I mean, particularly for this quarter, has been that the languishing part of the market has actually re-rated back. So, you know, a lot of the negativity has gone out of the market. So, you know, the stocks which were not doing well, like telecom, public sector banks, corporate banks, even in some cases pharmaceuticals, they have sort of re-rated back. And FIIs have stopped selling as well. So the two big negatives, the drag sectors and the drag liquidity, which is the FII, they've actually corrected and reversed to the mean. And therefore, there's a case for maybe in the near term a bit of a melt up in the market. But after that, you know, as one worries about a market where there are very few shorts, I think now the complete absence of negativity, while in the near term might lead to a melt up, in the medium term might be making the market a little bit more vulnerable of that correction that we've all been speaking about.
Okay, all the marquee NBFCs are starting mildly in the red. Bajaj Finance, JM Financial, Shriram, Transport, Reliance Capital, all of them are starting a tad in the
Titan
red.
is up 13%.
14 now.
Fair point. Actually, let's quickly get, it's almost 9:15 now. We need to get to Hemant Takral to get the FNO rates. But I think this 120.24 as we speak. Sensex down about 85. That's again a 0.25%. And the Nifty Bank is down the steepest. It's down about 0.4. Yes, we will gloat over Titan in a bit. The sparkle is there. But in the Nifty itself, it's only M&M that's doing well. And that's because of the bonus announcement. Indiabulls Housing is seeing a little bit of short covering. Bharti Infratel, ITC, ONGC, of course, is bringing up the green brigade. Otherwise, there isn't much to speak in terms of what stocks are in the green. In the red, Bharti Airtel, Vedanta, IndusInd, Reliance, Hindalco, SBI, Hero Moto, HPCL, Dr. Reddy. So actually, today, yes, a little bit of negativity that started off in the Asian markets is continuing to hold. Standout mid-cap performer other than Titan?
Well, by the way, Titan is on a 20% move now. What a blowout performance by the stock. Clearly the stock of the morning. Some of it is actually rubbing off on something like a PC jeweler. Not sure if that's a rate that's still holding. Let's pull up PC as well. About 6% on the upside, yeah. Other good result reactions include a Kitex garment, which is up and about. Hathway's mega move after second quarter earnings is continuing this morning. Another 5% up on Hathway as well. BEML, Torrent Pharma, these are some of the other positive stocks. Some of the Amtech group companies are surging on hopes that they'll find buyers with the likes of Bharat Forge making their intention very official. So some of the Amtech group stocks are up and about. UCO Bank is down 5.5%. Some of the infra plays which got knocked out because of the NHAI order, they are in focus. MBL Infra is down to 2.5%. Not too much loss. But I guess really, Anuj, it is all about the way Titan is sparkling today.
Yeah, 10% you thought, it's 22% now. 22% on Titan. And you know what? We were discussing that day. Amazon on a single day added how much market cap? $60 billion market cap, right? It's so much money chasing equities and chasing growth, right? So this is what the market has done over the last 1 year or 2 years. Clearly made this distinction between the companies which are growing and throwing all the money at those companies. It's happening globally, and I think India is part of that, and that's what's happening right now. But quickly, let me take Ashwini's thoughts on the market opening. Ashwini, thoughts on market opening? And Titan, what would be a good level to buy? Surely not at 22% higher, right?
See, good level to buy was on Friday. So, now the opportunity is gone because the stock has reacted, good news, etc. is out. Now, at some point, it will cool off and maybe, for some reason, if it gets back towards, say, 650, 700, that zone, the breakout zone, that's where you want to buy. Because if you chase here, next quarter, if the results aren't as good, then you could be ending up in trouble. This sort of euphoric rally is often the end of something, not the beginning of something.
Okay. We're just coming back to all of you in a minute. Hemant Takral has been with us. Hemant, good morning. What are your trades now?
Yeah, good morning, Latha. First is we are still looking to buy Bank Nifty at every dip, and luckily today we all have got a dip. I think it's a buying opportunity. We are seeing 25,300 put writers getting very active. So we will be buying that, keeping a stop loss of 25,300 and a target of 25,800, 850 on the same. Within the banking pack, we like Karnataka Bank a lot. That's as an individual stock are picking. The stock has seen 16% open interest built up. More interesting for me was the way 170 call writers were getting forced to unwind the positions. So we are buying Karnataka Bank with a stop loss of 164 and a target of 179. And one more stock that we are recommending to buy is from Nifty 50, that is Tata Motor DVR. We saw a lot of cash volume surge in both Tata Motors and Tata Motors DVRs. Reason to choose Tata Motor DVR over Tata Motors is the open interest. It saw 8% open interest on Friday, and the way it's added on 240 put additions, it seems now the new base is 240. So we will be buying with the stop loss of 241 and looking at a target of 265 to 268 there.
Okay. Hemant, thanks a lot for joining us, and thanks a lot for your patience. We had to deal with a lot of earnings, of course, this morning. By the way, Titan is coming off from the high point, and quite a bit. From being 22%, it's up only 14% now. Still a $10 billion market cap
Even
company.
the Nifty has recovered a lot.
The Nifty has
starting
recovered.
1/4% lower, it's now only 0.1.
Yeah, and the mid-cap index is doing well. By the way, the other stock is Union Bank. Udayan, coming back to pharma, it's been such an individual stock-specific story, but are you getting a sense that the worst for Indian pharma could well be over? And this is one sector where at least the valuations are below the median valuations.
You know, Anuj, I think what has happened is last couple of years there was a feeling that it was an untouchable sector because there was so much uncertainty, and periodically the bad news would blow up on a particular name and the stock would go down 20%. I think people just did not have the courage to touch pharmaceuticals over the last couple of years. I think that is over. But now people are saying the sector had derated. It had spent a long time out in the wilderness. But now we are getting to a point where valuations might have bottomed out, and we'll look at individual cases and probably put in some investments. I think we are in that phase in pharmaceuticals now where individual stock hunting is going on, and it's helping on the margin that some of these bombed out names like DVs, etc., are coming out of a very, very bearish grip, and that's giving investors a little bit more heart. But now the big distinction which is happening is earlier, I mean, the last bull market in pharmaceuticals was led by companies which were leveraging the US generics play. I think now people are actually more prone to buying maybe the companies which are exposed more to emerging markets, the Indian local market. So I think the lens has changed a little bit for pharmaceuticals, and therefore the kind of companies which might actually outperform may be very different to the ones which led the bull market the previous time round, because there is still a lot of pain in the US generics market. In that context, I think the deal between Torrent and Unichem is an interesting one, because it is really that play in the local market that I'm alluding to. So I think the horses might have changed in the pharmaceutical sector, but you're right in pointing out that there are clear signs that the sector has bottomed out on a valuation parameter.
Okay, but even Unichem Lab is up, though perhaps at the moment what people would be playing for would be a special dividend. So it's not just Torrent that's up at this point in time, 5% higher on Unichem as well. Then do stay on. Sudarshan, anything that's now emerged? I mean, the Nifty is fast. Sensex, I think, is already flat at yesterday's Friday's closing level, and the Nifty is getting there. Any index call, or is it a stock call?
No, there is an index call in the morning, and I think this is a good time to go and buy the Nifty and the Nifty Bank both. Your stops are now tighter because we know the opening price. 10,350 is our stop loss for the Nifty, and be on the long side of the market. Buy the indices. Two individual stocks are coming into play today. One is Adani Power and the other is Torrent Pharma, which you've already spoken about. Both can be considered for the day.
Then shifting focus to the action in the primary market. I mean, today is an interesting day because we'll have the first asset management company in India coming out and list. We all know the subscription numbers, you know, the theme, the financialization of Indian retail savings, etc. But the question is whether you think that this can be a sustained long-term value-creating, proposition for investors, the Reliance Nippon IPO.
I like the space, Surabhi, and we've spoken about it in the past. Now, you can argue whether what is the right way to play this space. Do you want to play it through a broker? Do you want to play it through an asset management company? Do you want to play it through a bank in which many of these plays are embedded? Personally, I mean, if HDFC Mutual Fund or ICICI Mutual Fund or their asset management companies were listed separately, because of their pedigree of their parentage, one would have lent a bit more towards them, but they're not. I mean, they're part of embedded plays now, and therefore you've got Reliance Nippon, which is number 3 or number 4 in the game. I think they've done a good job over the last few years. I'm not a great fan of their parent, but you look at it as a distinct entity. It has got very good growth in assets under management, but everything is good at a price. And I guess they will list at maybe over 4.5% in terms of market cap to AUM, and probably stabilize somewhere in this 4.5% to 5% kind of range. You will not get very meaningful corrections in this particular space now, this whole financialization theme. So I think 4.5% to 5% market cap to AUM, it puts it in that zone of 270, 300. And I think 270 to 300 is about the price, fair price. I mean, it can list above 300 today, but that probably is the zone where you would need to be buying, or the stock should be stabilizing at a fair level.
Okay, Udayan, thanks a lot. As always, we'll of course have more chats with you. That's the view from Udayan Mukherjee. By the way, I just want to point out one stock, Sun TV. It opened 2% lower, but the listed Sun TV has no relation to the the Paradise paper reports. It's a Khemka Sun group, so that's why I think from lower level there's a bit of buying as well. So the listed Sun TV, I just want to clarify, has absolutely no issue with that. But Mitesh, your thoughts on market opening and any stock that looks good to you?
So fairly subdued opening, I think, but that was better than the SGX indicated. I think a couple of stocks which are immediately showing traction on the upside after the opening are BEML. The stock is up about 3% now, but I would still be a buyer with a 20-point stop loss for a 40-50 point kind of target. And that apart, I think Ujjivan is seeing good follow from the breakout which happened on Friday. That's a positional buy. Keep a stop below 370, 405, 410 should be your target.
Okay, Ashwini, any individual stock that looks good to you?
See, PC Jeweler is up only 5%, while Titan is up 16%. So I think you will see follow through even on PC Jewelers, because the market tends to extrapolate results to other stocks. So that way I think PC Jeweler can be bought, and also BEML looks like it's resuming its rally. So that's where you can look at.
Gentlemen, thank you very much for joining us with your thoughts on a bunch of stocks, staying with us through pre-market and the early market hours. We'll, of course, seek your advice on the hour, much earlier perhaps, the way the markets are trending. With that, let's invite our market master for the morning, Pramod Gubbi, Head of Equities at Ambit Capital, joins us now. Pramod, good morning. And the most important question that a lot of investors will want to ask you is the attitude to India turning as far as foreign investors are concerned? Big number on Wednesday, big number on Thursday. Friday was a little clouded because of that Intersea Bharti sale. So perhaps we have ended mildly in the red or green. But it looks like the FI selling has stopped and buying begun.
Yes, indeed. I mean, I guess in terms of action, it's early days. Could be potentially a result of some short covering as well. But based on our interactions, we can really get a sense that the reaction or the response to the recapitalization and sort of quasi-stimulus by the government has been positive, that it will finally trigger some economic activity and sort of arrest the slowdown that we had been witnessing of late. So to that extent, the response has been positive, but although I don't think they've started to open up their purse strings yet, like I said, it's just been a little over a week, so I won't jump the gun and say that they've actually put some money to work. It could potentially be a lot of short covering as well.
Pramod, good morning. In that case, would it be time to look at the economy facing, the capex facing stocks? I think something which the market has already done over the last 2 weeks. We have seen a big rally in BHEL. Larsen has started to make a move. Would you be looking at some of these stocks?
Yes, indeed. I think given the state of the rest of the market, the defensives and the much loved private sector banks and financials in general, I think it is time to look at some of the cyclicals, be it industrials, construction companies, real estate, metals, and so on. Relatively reasonably valued, but at the same time they are facing what could potentially be the beginning of the capex cycle. A lot more needs to be done, but it's definitely worth keeping an eye on those sectors.
Okay. Pramod, let me get you back to the finance space. Now, which sector will you play in the finance space? Will you play PSU banks? I mean, at least marquee names. Will it be private sector but corporate lenders? Then, of course, private banks and the whole gamut of NBFCs, the pure consumer financiers like, say, the Bajaj finances, housing finance. Which would drop off your list? Which would ascend in your list?
I mean, the private sector financials, both the banks and the NBFCs have some really high quality names, absolutely no doubt about it. But, you know, like we've always been saying, everything has a price, and we are hoping for, you know, a fairly meaningful correction there so that we can, you know, start recommending a buy on some of these names which stand out. But having said that, I think you know, the markets have a very brief sort of correction, so valuations are still not at a stage where we can see that margin of safety. Instead, I would tend to agree. I think the corporate-facing private sector banks and some of the larger PSU banks may be worth looking at. We'll have to wait and see the margin of safety. Instead, I would tend to agree. I think the corporate-facing private sector banks and some of the larger PSU banks may be worth looking at. We'll have to wait and see the you know, real details of the recapitalization. But our sense is, you know, aside from plugging the hole in the balance sheets, much of the growth capital should go to the larger PSU banks who have demonstrated you know, better ability to manage their asset quality as opposed to some of the mid and smaller guys. So, to that extent, if you are seeing a pickup in capex activity, you need that growth capital to demonstrate loan book growth and earnings growth. So.
Okay. Pramod, okay, we have a problem with the audio, but we should be able to set it right very quickly. The markets are showing a little bit of resilience as far as the Nifty. In fact, even the midcaps, I mean, 0.25% higher. Have we reconnected? Pramod, you can hear us?
Yes, I can hear you.
Yeah, you were finishing. We just missed your last sentence on the financials.
Yes, so the point I was making was, given that we are at the beginning of the capex cycle, I think you need to look at lenders who can benefit by growing their loan books, getting themselves exposed to that cycle. So the private sector corporate banks and the larger PSU banks would certainly be on my radar, partly because, you know, the valuations are also suggesting a margin of safety, which, unlike the private sector retail-facing banks and NBFCs, are not.
Okay, just one more question on that. There are some who believe that the PSU banks will initially attack the home loan market and they will have the aggression to lower rates because of capital. So how would you rank housing finance companies?
Yeah, I mean, not so much home loans. In fact, the private sector banks, even the PSU banks have been quite aggressive in the home loan market in the last 2 years.
Yeah, I meant public sector, sorry.
Asset book largely from... Right. So the asset book have moved from corporate to retail. Within retail, home loan has been the category that they have attacked the most. To that extent, in fact, housing finance companies have moved their portfolios away from plain vanilla prime mortgages towards developer financing and loan against property. Now, the real question is, will the PSU banks now start attacking that category about developer financing and LAP, because both these categories are relatively higher yielding compared to your prime mortgages, and that's what was boosting the margins of some of these housing finance companies who are already under attack from the core mortgage sector. So if we see the PSU banks getting active on, you know, developer loans and the loan against property, which are essentially SME loans with property as collateral, then we'll see that the housing finance companies will come under significant pressure as far as yields and margins are concerned. So it's a double whammy. To defend their market share, they'll have to cut down the rates, and that will flow through to the bottom line and slow down earnings growth, especially at a time when valuations are fairly punchy.
Pramod, Is politics a risk for this market? We have fairly important state elections now, starting with Gujarat, and then next year, of course, we have states where BJP is in power, and there could be some anti-incumbency. So, could that be an issue for this market?
No, possibly so. It's always on the minds of investors, but this is a market which has looked beyond any sort of risks here, and to the extent that you'll have a short-term reaction, and then we'll get on to behaving the same way that it has behaved over the last 2 years, given the strength of the flows, and like we discussed, alongside domestic flows, if global flows also turn positive, then I guess will at best be a minor disappointment to start with. But for the fundamental investor, these are always opportunities because in the long run, it really doesn't make much of a difference to underlying strength of the fundamentals or earnings growth. So if there is any adverse reaction in stocks that you particularly like, we would see it as a buying opportunity.
Pramod, morning. So, we've discussed PSU banks. Any other pockets of the market where you are willing to play the possible recovery theme, where you're looking for value and maybe there's some green shoots around the corner? Any themes come to mind? Maybe that's something that's propelled a stock like Bharti Airtel, to these historic levels, so to speak.
Yeah, we'd be keen on construction companies. We know that the government has announced this massive road build-out program. It's giving an extra credibility to that program continuing. So to that extent, it sort of underpins the order books of some of these companies, and we've also seen execution pick up after a long time. So to that extent, both your order book and P&L will start showing good results for some of the construction companies, especially exposed to the road sector. And potentially, I think once after the correction and once the dust around RERA settles down, real estate is a sector perhaps worth keeping an eye on. That's been out in the doldrums for quite a bit, and some of the better placed companies, better capitalized companies could be significant beneficiaries of this consolidation that's likely to happen. And again, housing has been at the cornerstone of any economic recovery, any meaningful capex activity. So I'm sure the government will have its eyes on seeing this sector recover, and I guess construction companies exposed to buildings also are likely to be beneficiaries from that. So EPC in general is definitely a space worth keeping a lookout for.
For your time today. Always good talking to you. That's a view from Ambit. Still not sure if that FI buying is for real or it's just part of short covering. By the way, before we take a break, just keep an eye on United Spirits. That's a stock which is opened lower but has seen a sharp recovery. In fact, now trading at the high point of the day, and interesting to see almost getting back to that post-result days high.